Hey everyone, back in 2023, it was either January or February of 2023, I attended the Satoshi Roundtable conference in Dubai. I've been twice. I think I went once in 2023 and once in 2024. But back in 2023, when I attended, I started, before the conference, I made a list of 17 things that I did not yet understand about Bitcoin that I was going to try to get an answer about at the conference. And I got an answer to most of the items, although some of them are, harder to answer. But I figured I would go through those 17 because it would give you a sort of a peek into what my mind was, what was going through my mind back in 2017. Sorry, not 2017. These are 17 questions back in 2023. The 17 questions from 2023 that I had about Bitcoin. And I thought you might have some of the same questions, and it might be interesting to go through them one by one. So I'm going to start and just go through them. And so question 0, I made a question 0 because I thought of this question and I wanted to stick it at the top, and I didn't want to renumber them all. So I guess it's technically 18 questions, but I'll number them 0 through 17. Okay, number 0. Now, at the time of the conference, the price of Bitcoin was between 22,500 and probably 23,500. So all of these, realize, are from a perspective of the price of Bitcoin has roughly quadrupled. It's roughly quadruple from when I was asking these questions and when I attended this conference. Okay, so again, the Bitcoin price was between about 22,000 and 23,000 at the time I had these questions and attended the conference. So question 0, will a broad stock market crash drag Bitcoin down to the bottom with it? And has that happened, or will it happen? And how does that compare to March of 2020? So the general verdict from that is, sure, when everybody's selling everything because everybody's panicking, it drags the price of Bitcoin and other assets down with it, but it's temporary. And as soon as everybody comes to their senses, Bitcoin bounces back faster than everything else, because unlike a lot of the stock market, Bitcoin is not massively overvalued right now, whereas most of the stocks and bonds, real estate, and everything else has essentially the prices are stratospheric. And at some point, if we get a major worldwide recession, all of those prices are going to return to something more normal. Whereas I would argue, and so would those at Satoshi Roundtable, that Bitcoin is significantly undervalued. And therefore, it's going to bounce back quickly and the adoption will continue, which is what happened in March of 2020. It dipped sharply in the middle of March of 2020, but ultimately Bitcoin bounced back much faster than everything else and ultimately went on a wild tear from, in the dip of 2020, I think Bitcoin got as low as like $4,000. So it's up like 20x. So that's a lot of percentage points, 2,000%, 20 times your money from that dip in 2020. So that was question 0. All right, number one, is Nick Szabo the real Satoshi? The verdict is no. If you ever go on a who is Satoshi Nakamoto quest, you will eventually come to the conclusion that it's probably Nick Szabo. And then the more you research, the more you'll realize it's not him and that you have no idea who it is. So anyway, there's a recent book called Unmasking. I think it's Unmasking Mr. Nakamoto or something like that. Anyway, I did a Facebook post about it. It's a super comprehensive, insane 15-year journey of somebody doing the most in-depth writing and reporting that has ever been done to try to figure out who Satoshi Nakamoto is. They ultimately concluded is not Nick Szabo, and that they don't know, and that nobody knows, and that may be the case forever. So I came to the same conclusion as soon when I talked to, at the conference, I talked to Adam Back. I talked to the guy that invented Litecoin was there at the conference. Anyway, a lot of the sort of Bitcoin OGs were there. And I talked to each of them about all these questions and got the, same conclusion from all of them, which is, it's not Nick Szabo, it's not Adam Back, it's not any of these people. None of these people invented Bitcoin. We just don't know who invented Bitcoin. So question number 2, why 21 million Bitcoin versus 42 million or some other even number? And the answer is Satoshi Nakamoto, the inventor of Bitcoin, just picked it. And he picked it based on totaling up the total amount of monetary supply in the United States and tried to set the price of a Satoshi, the smallest unit of Bitcoin, 1/100 millionth of a Bitcoin, at a US cent. Now, the money supply is much larger now than it was way back then. So the price of Bitcoin, even if it gets to parity, the smallest unit is the same as a cent, will still be $1 million Bitcoin. But it's ultimately destined, I believe, to go far higher than that, because that is only the U.S. monetary supply, not other countries' monetary supply. Anyway, but the other thing is there's a floating point. There's some specific amount that if you go above it, the math gets much harder to do due to floating point math in JavaScript and things like that. And so Satoshi both wanted to pick a unit, which is 21 million, subdivisible into 100 million parts each, that would roughly be equivalent to all of the sort of the monetary system he was trying to replace. But also he was trying to stay below that floating point math difficulty that kicked in if you got above a very specific number, which is slightly above 21 million. So it looks like he picked 21 million Bitcoin for a combination of that was about the supply that he wanted to pick based on his goal to replace the entire financial system and all of the currencies in it, combined with the need to make the software easy to develop for people in the future without introducing complexity with regard to floating point math. So that's why we have 21 million Bitcoin. All right, so why 8 decimal places versus 9? So each Bitcoin is divisible into 100 million units, but that makes it awkward for decimal points because mostly you do decimal points every 3 numbers instead of every 2 numbers. And there are 2 reasons for that. One, people hypothesize that he was sort of trying to do it like dollars and cents, where this, you basically divide US dollars into thousands, millions, billions, trillions, but ultimately the smallest unit on the end is only 2 decimal points instead of 3, which is there's not 1,000 pennies in a dollar, there's only 100. So some people hypothesize that the goal was to replicate that, where Bitcoin was divisible into 100 million. So each Bitcoin would be, divisible into 1 million units and then further subdivisible into hundredths, like the penny. So some people hypothesize that is the reason for that. And then the other is, again, it goes back to floating point math, is had there been an extra decimal so that for example, each Bitcoin was subdivisible into, instead of 100 million, a billion, for example, suddenly that creates complexity with regard to floating point math in certain computer programming languages that have a hard time holding numbers that have more than a certain number of decimals. And he did not want to introduce the possibility that sloppy computer programming in the future would create issues with floating point math, with JavaScript and things like that. So whichever of those reasons was the case, it resulted in 21 million Bitcoin subdivisible into 8 decimal places, not 9 decimal places. And I think we talk about in terms of Bitcoin right now. I think at some point when each Bitcoin is worth $1 million per coin, probably everybody will start talking about it in Satoshis, because at that point, at $1 million per coin, 1 Satoshi will be equal to one US penny. And so it'll be a lot easier to sort of talk about prices as in, something that costs $8 is 8,000 Satoshis. But anyway, that probably is not going to happen until Bitcoin approaches and subsequently crosses $1 million per coin. Okay, number 4. Again, it started at 0, so technically this is the 5th question, but the number 4. Why having a halving instead of gradual? So Bitcoin could have been set up where instead of the supply issuance dropping by 50% every 4 years, it could have been set up where basically every time a block is mined, every 10 minutes, it microscopically reduces the total amount of new Bitcoin. So it's like, okay, for example, right now, every time you mine a block, whoever mines the block gets 3.125 Bitcoin. And then you could have set it up that the next block is 3.124 Bitcoin, and then it's 3.123 Bitcoin. And instead of it dropping in half every 4 years, that it's instead, it just gradually tapers, which would have been smoother than just sort of an every 4 year, more of a sort of significant drop. Okay, so people have different opinions on this, of why it was set up this way. The most logical one, which is sort of the, what people talk about with, if you hear hoofbeats, think horses, not zebras, like what is just the most obvious reason, is the fact that the computer programming is super simple to do that way. It's like 5 lines of code. So to set it up with halvings, it's literally the entire monetary sort of issuance and monetary policy of Bitcoin is literally 5 lines of code. It's super simple. It gets a lot more complicated if you set it up where the block reward, which is the amount of Bitcoin that each miner gets every 10 minutes, if it gradually tapers off a tiny amount every 10 minutes, that is a lot more complicated to program from a computer science perspective. Other people hypothesized that it was not just due to the simplicity and elegance, but that Satoshi was trying to take advantage of what's called the Gartner hype cycle for technology adoption, which is that it is helpful if periodically to trigger a new wave of adoption on, when you're starting from zero, you have a supply shock, which means you have something that triggers there being a lot less of whatever it is, thereby triggering a price increase. And when you add that together, it triggers adoption, obviously, because everybody notices the price is going up. So people are not certain, was Satoshi Nakamoto trying to leverage the Gartner hype cycle of technology adoption by setting up the halvings the way they are, which would basically trigger a new wave of adoption every 4 years based on a supply shock? Or was he just trying to make the computer science code nice and super simple and elegant? I think it's probably just the computer science code, but it did have the very helpful effect of making it adoption sort of naturally kick off a new cycle. Now, in the current stage of Bitcoin adoption, you don't need that because it's already one of the 10 largest assets in the entire world, and it's getting adopted organically. But in the early days, when nobody knew what Bitcoin was and it was tiny and nobody was sure if it would catch on, it definitely was helpful to have this every 4-year supply shock that would basically, force the price to rise based on the decrease in supply. And therefore, suddenly everybody would start paying attention to Bitcoin again. But it was probably just simplicity of computer science code. Okay. And I talked to a guy that worked for Bitcoin Magazine, and I asked him all these questions, and I said, if you could change anything about Bitcoin today, would you change anything? And he said, no. This was back in, again, 2023. And I came to the same conclusion after asking all of these questions, and originally thinking, surely there's a way to improve Bitcoin somehow. I ultimately came to the conclusion that there is not. And if somebody handed me a magic wand literally today and said, you can go back to the very beginning and change one thing about Bitcoin, I would literally change absolutely nothing about Bitcoin. There is nothing you can possibly change about Bitcoin that does not make some other aspect of Bitcoin worse. And so it's basically perfect in its original design. And all of my research has led me to believe that any change to Bitcoin would make it worse, not better. And therefore, it's as perfect as it could be from the start, which is pretty incredible. So anyway, is the hype cycle accurate? The answer is yes, but eventually it will not be relevant anymore. If you want to understand the Gartner hype cycle of technology adoption, read Vijay Boyapati's book, The Bullish Case for Bitcoin. That book, again, is The Bullish, B-U-L-L-I-S-H, Case for Bitcoin. Fantastic book. It explains how technologies are adopted, why Bitcoin's price does what it does, and once you understand why the price of Bitcoin behaves the way it does, it'll make you much more comfortable with it as an asset class. But over time, the Bitcoin halvings have less and less effect with each halving. That doesn't mean there will not be hype cycles. It just means less and less they will be triggered by Bitcoin halvings. Okay, so what explains the ups and downs of the price of Bitcoin? The short take is, in the near term, it's basically the same thing as supply and demand that affect every other asset, which is people, one day they think Bitcoin's taking over the world tomorrow. The next day they think it's never going to happen. Everybody's speculating all the time. Everybody's guessing what everybody else is going to do all the time. And everybody is, buying or selling Bitcoin based on every random bit of news. And it just results in a, short term, a lot of volatility. Long term, all of that volatility goes away as the asset gets bigger and bigger and bigger. And but anyway, so in the long terms, it's driven by the Gartner hype cycle, although again that is diminishing with time. In the short term, it's just supply and demand doing its thing, which is just, that's what happens with any asset. It's the same reason major stocks, the Magnificent Seven stocks go up and down on a daily basis, even when there's literally nothing in the news about them. I mean, they're just going up and down because everybody's speculating on what might happen in the future and all this stuff. Okay, next up we got, what about Federal Reserve monetary policy? Yes. So the biggest corollary in Bitcoin What Bitcoin correlates to more than any other thing is the Federal Reserve monetary policy. How loose or tight is the Federal Reserve? Basically, where are they on the spectrum between printing insane amounts of money to just printing a little amount of money? And that goes up and down as they're trying to contain inflation, which is entirely caused by the Federal Reserve printing money. So they print money, it creates inflation, then they try to rein it in by easing off of that. And so Bitcoin is correlated to global liquidity, meaning how much money the central banks are printing out of thin air, more so than anything else. And right now, the central banks are just ending a tightening cycle where they are trying to suck money out of the economy by offering people high interest rates, which is one of the ways they do it. They offer very high interest rates, which encourages people to put money in certificates of deposit or store it at a bank account where they can get interest. And then eventually stuff starts crashing because everything in our economy is built on debt. And as everything starts crashing, they have to print a bunch more money to keep everything from crashing. So Lynn Alden and who was it? It was Lynn Alden and Natalie Brunell's husband, Sam Callahan. So I think Lynn Alden and Sam Callahan did a comprehensive report on how correlated Bitcoin's price is to global liquidity, and found that basically it's one of the highest correlations that Bitcoin has to anything is global liquidity. So as a result of that, obviously, it's worth paying attention to that. And right now we're just getting to the point in the cycle of things where the Federal Reserve and national, central banks around the world are starting to crank out huge amounts of free money out of thin air, which should correlate again to a significant price rise with Bitcoin. Okay, let's see. Next up here. What about inflation and being a hedge against inflation? So Parker Lewis does a really good job of explaining. There's a number of talks he's given where he says, look, Bitcoin is not a hedge against inflation. Bitcoin is a solution to inflation. And he explains what that means. I'm not going to go through all of it other than to say, the price of Bitcoin is much more correlated to global liquidity than it is to inflation. Inflation is a lagging indicator. When the central banks of the world, including the Federal Reserve, print a ton of money, that later shows up in this form of inflation. But the price of Bitcoin rises as a result of printing a huge amount of money. And then when the Federal Reserve and other central banks clamp down on the printing of money, Bitcoin's price tends to fall. But it tends to fall right at the time that the inflation that is caused by all that money printing is showing up. So oftentimes people are like, but wait, we're getting record high inflation in 2022 and the price of Bitcoin is falling. How can Bitcoin be a hedge against inflation if the price of Bitcoin is falling? The price of Bitcoin is falling even though inflation is rising. And the answer is because Bitcoin's price was rising when the Fed was printing tons of money. And then it starts falling when the central banks are trying to suck money out of the economy, which again sucks money out of everything, including Bitcoin, because they start offering ridiculously high interest rates in order for people to take their money out of the economy and put it in certificates of deposit, or for the banks to store their money at the central bank, and they get paid interest to do that. But if you want more detail, read Parker Lewis's work on why Bitcoin is a solution to inflation, not a hedge against inflation, and he explains what he means by that and all of that, which again is probably warrants its own video, but I don't have time to do that right now. Okay. Why is Bitcoin so correlated with the NASDAQ and not the NASDAQ stock and other tech stock markets? The answer is because in the short term, people think of Bitcoin like a technology stock rather than a new form of money. At least some of them do. And so speculators and tourists who own Bitcoin and don't understand what they own and they're not sure, basically they trade it like a stock, even though it makes no sense to do that. But that does make the price go up and down. So over time, Bitcoin has gotten significantly less correlated to the NASDAQ, and it's much less correlated now than back when I wrote this question down. And so right now it's less correlated, and in the future it will probably be inversely correlated, meaning when everybody is scared, they will run to Bitcoin, and when they want to speculate on crazy stuff, they will go from Bitcoin into the crazy world of speculating on whatever. And then as soon as they freak out again, they'll run back to Bitcoin. But right now, the reverse is happening, where people are still acting like Bitcoin is some sort of a technology stock, and they're, buying and selling it accordingly, at least to some degree. Okay, next question. What is the upper price limit, base money or beyond? Okay, so there's this concept of base money, which is tracked by Porkopolis, which is a Twitter handle. I forget the guy's name. It's Matthew something, but anyway, it's Porkopolis. But anyway, he tracks worldwide base money, and the base money, the last I can remember, is 25 or 30 trillion dollars, and then the M2 money supply is like 120 trillion dollars. So, since that question, Michael Saylor and a lot of people have done a bunch of research that basically says, look, the market for Bitcoin is not the world's money supply, because people don't use the money in the world the way they should. They basically only use money for short-term stuff because central banks are constantly printing more of it. So they store their wealth in things like real estate or the S&P 500, the stock market, NASDAQ, all that. But ultimately, since then, the better estimates are, for example, the research Michael Saylor's done, which I forget the website he publishes it all on, but it estimates sort of a base case of Bitcoin at $3 million per coin, and a more aggressive case at $13 million per coin. And he's got all of the reasons behind that. The easiest case to make is Bitcoin as digital gold. All of the gold in the world right now is worth about $20 trillion. And all of the Bitcoin in the world is only worth $1.6 trillion. So whatever that is, 13, 14x, whatever a million divided by, or 20 billion, 20 trillion divided by 1.6 trillion. Anyway, whatever that number is, that is, there's a bunch of, multiples of significantly above 10x, something like, whatever, 13, 14x, just for Bitcoin to get to the size of the gold market. And most people believe that's sort of the starting point. So let's call it $1 million per coin is sort of the base case where Bitcoin has reached parity with gold. And at that point, it's a discussion of how much better is Bitcoin than gold. I would argue Bitcoin's a lot better than gold, but how much better, people debate. Okay, next up. Why is the depth chart so symmetrical? I'm not going to go into that one because it's complicated, but if you turn on in Coinbase Advanced the depth chart, the sell side and the buy side tend to be relatively symmetrical, meaning the number of people that want to sell at $1,000 above its current price tends to look similar to the number of people that want to buy $1,000 below its current price. And it just did not seem logical to me that would be very symmetrical, but oftentimes it is symmetrical. I don't have a good answer to that other than the behavior patterns of humans tends to be similar whether they're buying or selling, and therefore the people who are willing to buy or sell at a given price above or below the current price of an asset tends to look relatively simple or similar when you graph it out, which is what a depth chart does. Okay. Okay, so at the time, I had about 60%. This is January or February of 2023, so about 2 years ago, since it's, a little more than 2 years ago. I think it was February. So this was, it was definitely February. So from February of 2023 to March of 2025, 2 years, a little over 2 years, Bitcoin has gone from either 22,000 or 23,000 at the time of this conference up to $82,000. So 22,000 to 82,000, big jump. And my question was, at the time I had about 60% of my liquid net worth in Bitcoin. And my question is, when should I put the other 40% in? And basically everybody was like, well, now, of course, why are you even thinking about it? But again, I was newer to Bitcoin 2 years ago than I am now. And I was still figuring it all out and everything like that. So ultimately, between that conference in February of 2023, after Silicon Valley Bank and Silvergate and whichever the third one was, the three banks that took over, two of them got assassinated. One of them actually went bankrupt. So three big banks went bankrupt, one of them went bankrupt in March of 2023. The other two were assassinated by the government in 2023, and ultimately it turned out that they were solvent, and the government never should have taken them over, but the government took them over anyway because they were banking the cryptocurrency industry. And so the government at the time, the Biden administration, did not like the cryptocurrency industry. And so because those banks were banking crypto companies, they assassinated them. Basically, they pulled the plug on them and forced them into bankruptcy, even though they had money and were solvent. But anyway, after that happened, I ratcheted up from 60% to 80% because nobody blamed that on Bitcoin. Obviously, it had nothing to do with Bitcoin, but I was concerned people would try to pin it on Bitcoin anyway. But that did not happen, which gave me a lot of confidence. And Bitcoin went up rather than down after those three banks were either bankrupted or forced into bankruptcy. And that gave me a lot of confidence that, when the financial system became unstable, people would run to Bitcoin, not away from it, because that's what happened. So I ratcheted up my Bitcoin from 60% to 80% as a result of attending the Satoshi Roundtable in February of 2023, and then subsequently watching things unfold with regard to the banks that blew up or were taken over in March of 2023. I ratcheted it from 60% to 80%, and then ultimately later, I think in April or May, I ratcheted it to like 87%, and then I ratcheted over the next year or so up to 97%, which I stayed at a while, and then earlier this year, in the last month or two, I ratcheted up to 99% of my liquid net worth. So right now I have 99% of all of the liquid assets that I own or control are invested in Bitcoin, and the other less than 1% is mostly in Tesla to give me some diversification if you consider more than 99% Bitcoin and less than 1% Tesla to be diversification. I just want something that I'm not going to have heartburn if I have to sell it. And even though I love Tesla, it does not give me the same heartburn to sell Tesla stock that it would to sell Bitcoin. So by having a emergency reserve fund in Tesla, even though Tesla has, in my opinion, higher risk and lower upside than Bitcoin, it still does not give me the same heartburn to sell it in an emergency as Bitcoin. Although at some point I might just dump the Tesla stock and go 100% Bitcoin. But right now I'm above 99% Bitcoin. But at the time I was at 60% and I was asking that question. And the best thing I could have done is buy as much Bitcoin as I possibly could right then. But like everyone, I wanted to get comfortable. I wanted to give it time. I wanted to do more research. And so while I did buy a substantial amount of Bitcoin, I think the Bitcoin, when I went from 60% to 80% of my liquid net worth in Bitcoin, it was in the mid to high 20,000s. So it was a couple months after Satoshi Roundtable. So the price had risen from 22 or 23,000 up to like 26 to 28,000 when I dumped in another 20% of my liquid net worth. And then again, I did the same thing in the 40,000s, 50,000s, 60,000s, 70,000s. And I've even bought Bitcoin above 100,000. So never a bad time to buy Bitcoin. All right. So, next up, question 13. It's really 14, but I started at question 0. So number 13. What is your seed phrase storage advice? Split the seed phrase, or what is the best approach if you have multiple hardware wallets, et cetera, et cetera. This was before the invention of BitKey. BitKey, BITKEY.world, solved all of the problems related to seed phrases. So the questions that I was asking related to Bitcoin storage and best practices on seed phrase storage and all of that, all of the questions I was asking related to that became obsolete as soon as the BitKey amazing Bitcoin storage device was released, which solved all of those problems without you, the user, having to mess with seed phrases, which is a miracle. And the way they did it is truly incredible. So that question became obsolete. Okay, question 14. At the time, the main storage, or sorry, the main services out there, because BitKey did not exist, were Casa, C-A-S-A, Unchained Capital, and Zappo Bank. And I was asking questions about those three. Ultimately, Zappo Bank does not allow, or did not at the time allow U.S. citizens to have an account, so I could not use that anyway. And the verdict from everybody was Unchained Capital is a good solution for cheap, but Casa is the gold standard and more expensive. So anyway, so that was what I took away from that was for people with lots of Bitcoin that need a sophisticated setup, a 3 of 5 multi-signature setup. The best place to get that was Casa, C-A-S-A. But again, BitKey solved that problem. Okay. Question, let's see, 15. Okay, 15. What happens when two valid transactions both hit the mempool at the same time? The answer is every Bitcoin node is going to share every valid transaction it hears about with every other Bitcoin node it's aware of. And then the Bitcoin miners are going to start mining on whichever block they hear about first. So if two valid transactions spend the same Bitcoin, which is called a double spend. For example, if I tried to spend the same Bitcoin, let's say I'm sitting in Thailand and I also am spending the same Bitcoin in the United States, the question is, what happens because the mempools on the Bitcoin nodes in Asia are going to see one transaction, and the mempools on the Bitcoin nodes in the United States are going to see a different transaction, and each of those transactions are going to try to spend the same Bitcoin? The answer is only one of those transactions is going to get confirmed on the blockchain. So every 10 minutes, a Bitcoin block is mined, and that is how you know the official record of truth in the Bitcoin network. So if somebody tries to do a double spend like that, it will get rejected because the next Bitcoin block to get mined will only have one of those two transactions in it, because the rules of the Bitcoin network state, obviously, that you can't spend the same Bitcoin on two different things simultaneously. So that's why anytime you spend a lot of Bitcoin on something, it's good to wait until after it is confirmed in a Bitcoin block. And things like the Bitcoin Lightning Network, which was much more used for spending of like buying a cup of coffee, they work in a different way that does not require that. But the short take is every mempool is going to take whichever transaction it hears about first. There's something called RBF, replaced by fee. And so if you can escalate, if you want a Bitcoin transaction, you can push through a higher fee of a Bitcoin transaction to speed it up. But again, none of that is really relevant nowadays because, everybody uses the Lightning Network to pay for stuff, not Bitcoin on chain. So super technical. If you want more details, let me know, but it's not really relevant. But it was just a wonky, techie question I had. All right, number 16. What does the Bitcoin Lightning Network or other payment methods allow? Do they allow contactless payments like I can do already with my Apple Watch with the Coinbase debit card? The answer is all of those technologies are compatible with contactless payments, meaning one day you will be able to pay with the Lightning Network or anything else using your contactless payments, tapping your phone, tapping your watch, whatever. But a lot of that payment technology and the payment terminals that would support it are not there yet. So in the near term, I buy everything with a Coinbase debit card, which uses the Visa network. In the future, the payment terminals and everything will be updated to support the Bitcoin Lightning Network, and you'll be able to natively transact with Bitcoin, and you won't have to use the Visa network. But all of that technology can be used with contactless payments. It, for the most part, is not yet, because it just has not been implemented by Google and Apple into their contactless payment, which uses NFC, near field communication, NFC technology. Okay, next up. Question is, last one here, question 17. How does difficulty being 40 trillion how does a difficulty adjustment of 40 trillion translate into a much higher hash rate than that on the Bitcoin network? Okay, this is a complicated one, so not sure you want the answer to this. But so when Bitcoin was set up originally, Satoshi Nakamoto chose a difficulty adjustment of 1. 1 means that a Bitcoin miner will find a valid block every 4.3 billion tries. So a difficulty adjustment of 1 means every 4.3 billion tries, which is 2 to the something power. I guess I forget what it is, 2 to the 32nd power, maybe something like that. Anyway, it's the same with it's the same number of bits as the checksum. Basically, if you mistype a Bitcoin address, there is a 1 in 4.3 billion chance that it's valid, but you typed it wrong, but it's still valid. It's called the checksum checks for that. But anyway, so the same number of bits is the same for the difficulty adjustment. Again, it means you're going to find a Bitcoin block out of out of every 4.3 billion tries. So in the early days, he determined that with the number of people on the Bitcoin network, that would be about every 10 minutes, and he needed a difficulty adjustment. So the hash rate is how much total computational power is being applied to the Bitcoin network. There is some complicated mathematical correlation between the two, because when you increase the difficulty adjustment, you obviously have to, the hash rate, let me put it this way, the hash rate is going to determine the difficulty adjustment. So the difficulty adjustment goes up and down depending on how much hash rate is on the Bitcoin network. So the last time I checked, the difficulty adjustment was 112 trillion. Now, to run the math out there, a difficulty adjustment of 1 means 1 every 4.3 billion. So a difficulty adjustment of 112 trillion means the number of computations you have to try before mining a block is 112 trillion times 4.3 billion, because each increment of the difficulty adjustment represents an increase of 4.3 billion additional tries. So at the time I was doing this, or asking this question 2 years ago, the difficulty adjustment was at 40 trillion. Now it is more than 2.5 times as difficult to mine a Bitcoin block as it was 2 years ago. Because back when I wrote this, the difficulty adjustment of 40 trillion meant you had to try 40 trillion times 4.3 billion. Now you have to try 112 trillion times 4.3 billion. So the difficulty adjustment has increased from 40 trillion to 112 trillion. That's what it was 2 weeks ago. I haven't looked. It's up or down a little from there, but it's probably in the ballpark of 112 trillion. But the short take is, if you want to know how the difficulty adjustment translates into the number of hashes required to mine a block, it is, again, I think it's 2 to the 32nd. Whichever one lands you close to 4.3 billion, I think it's 2 to the 32nd power. But anyway, so you can look at the difficulty adjustment, and if it's 112 trillion, then you know that it is 112 trillion times harder to mine a Bitcoin block than it was when the Bitcoin network launched. It also means that, on average, they're going to have to guess 112 trillion times 4.3 billion times before they mine a block, which happens about every 10 minutes. And anyway, again, there is a mathematical, formula between the two, because the difficulty adjustment is set based on hash rate. It's set based on how every 2016 blocks, which is every 2 weeks, 216 times 10 minutes is 2 weeks. So every 2016 blocks, the Bitcoin network determines how fast or slow the Bitcoin miners are mining blocks, and it adjusts the difficulty adjustment to true it up to an average of 10 minutes. So obviously that difficulty adjustment has adjusted a gazillion times in the last 16 years and has gone from a difficulty adjustment of 1, literally 1, to 112 trillion. But again, there's a direct mathematical correlation between those, but I don't know what that math formula is, because it's sort of an indirect mathematical relationship. Okay, so that is the last question on my list. So what does all this mean? Well, what it means is I did an insane amount of research, came up with every conceivable question I could to try to understand how Bitcoin works and whether it was a safe place to ultimately store 99% of my liquid net worth. The only thing else I own is less than 1%, which is mostly Tesla, and the remainder is illiquid assets, meaning not liquid assets, like my stock in Prospera. But obviously that's not liquid. I can't buy groceries with illiquid stock, and that will only become liquid, for example, if Prospera goes public on the stock market. So what benefit is all this to you? I guess it's that I've done an absolutely insane amount of due diligence to make sure every conceivable aspect of Bitcoin is rock solid, bulletproof, and the technical fundamentals are amazing. And the way Bitcoin works is, just an incredible breakthrough for humanity. And anyway, I'm just super impressed with everything about Bitcoin. So hopefully my due diligence helps you have confidence in Bitcoin, even if you don't have time to do the same level of due diligence yourself. And I understand most people don't have many thousands of hours to study this sort of thing the way I do, because I love this stuff and I basically listen to audio content constantly. So anytime I'm not with my family or at church or working on Prospera, I've got headphones in and I am listening to podcasts, listening to books, or using a text-to-speech app that reads me news articles, PowerPoint presentations, PDFs, you name it. Any sort of written content that I find can be turned into audio content and can be piped into my ears to feed my brain. And so hopefully you can benefit from all of that. So those are my 18 most burning questions that I had walking into Satoshi Roundtable in February of 2023, about 2 years ago, with the price of Bitcoin between $22,000 and $23,000 per coin. And those were the burning questions I had. And I came away satisfied with the answers and ultimately ramped up the amount of Bitcoin, my net worth in Bitcoin from 60% to 80%. And since then have ramped it up to above 99%. I hope all this is helpful. Have a great night, everyone. Thanks.